Hey everyone, Tom here. Today we'll be talking about the latest stock market news, including the rising tensions between US and China and what this means if you're a stock market investor or trader, and our technical analysis levels for the S&P 500, NASDAQ, Dow Jones, and 10-year Treasury bonds right now. Are we seeing a double top on the NASDAQ? Stay tuned. So the first thing we always like to do together is to have a look at what happened yesterday in the market to try to get an idea of what the market is either concerned about or happy about at that time. So one great way to do that is by looking at a heat map of the big companies. And yesterday it was very clear that people were getting out of tech stocks. They were selling down Microsoft, Apple, Google, Facebook, and Amazon. And these have been considered the defensive stocks or the aggressive kind of growth defensive stocks during this crisis period. Other tech stocks and semiconductors also suffered. And what's more important is when we look at the weekly performance now of a lot of these stocks, this is the first time I've seen Apple red for quite a while. Apple has not usually been the kind of down one. So Microsoft, Apple, Google, Facebook, and Amazon were clearly the big plays of yesterday. Now, when we look at the NASDAQ during the last trade war tensions, and this happened in 2018 down to 2019 at the start, we did see a big sell-off in the NASDAQ. That was the one market that sold off the most. We went from 7,700 and then quickly kind of sold off all the way down to the low down here of 5,868. So pretty considerable sell-off. And when we consider that the NASDAQ is now trading around 10,500, it shows you how much gains were made, but also how much it can sell off during these types of events. Another thing that has the stock market a little bit worried is the rise of unemployment claims. Does this signal an economic reversal? Does this signal that things aren't as good as people think now that we've got this so-called second wave or first wave continuing? Are these having a longer lasting effects on the market? That's of course a question that the market is now asking. It also means that the forecasts are getting wrong. So this week they upticked it slightly in terms of these yellow lines, they're the forecast lines, but you can see that the market actually got it wrong in terms of the economists. They thought that it would be a little bit higher than the week before, but still lower than what it was. And this is a bit worrying when we think about what is really happening in the economy. But I think a lot of what's going on right now is, of course, these tensions. The tensions will be the catalyst that nobody so-called was talking about. We all knew was there, but this is what Wall Street wants to do. Wall Street, I made a video about it. They love taking money off retail traders. There's a lot of euphoria in certain stocks, the Robinhood traders, and obviously rising up, and they've made a huge portion of the volume over this steep kind of incline. That means that the Wall Street traders want to steal their money and they'll use some kind of catalyst to do that. Is this the catalyst? We'll have to see with closes, and of course time will tell. But China has now ordered the US to close their consulate, and this is a retaliation move over the US's move in Houston. This starts to put pressure on things like bonds and the US dollar as well. So when we get into the technical analysis, let's just talk about these 10-year treasuries and where they're at right now. So strong support of $1.40 was broken during the crisis, and this really signaled people moving into bonds. Obviously, they were kind of crushing the returns on bonds, and it's very arguable that bonds are looking like terrible investments over the next couple of decades. But this is where money does go. So it broke through that support. It did so on that 24th of February weekly candle, and that was pretty much the signal where we saw a huge amount of shock in the stock markets. Are we about to see that again? This support down here of 0.58 is coming under pressure. We have not seen a weekly close underneath this zone. What do we expect as technical analysts? Well, we'll be doing a full summary of this and all of our stock market thoughts after the close on Friday in the US. And make sure you subscribe and of course hit the alert button if that's something that will interest you. We do a full week ahead synopsis on the key levels that you'll be wanting to look at as a trader and an investor. Basically, if we see a close, like we see a candle get under this level, that will be the confirmation that something very important has happened on these bonds. And it's one of those signals that you put together with your other analysis to try to bring together a story as much as possible of a certain amount of sentiment coming into the market. Usually then we wait for the market to come back up, test this level, and then find what we call role reversal, where the previous support level of the 0.58 becomes resistance, and then further selling occurs. We may not want to trade, let's say, 10-year bonds, but what we might want to be doing is then going and having a look at the coinciding levels on the Dow, NASDAQ, and of course S&P 500. So before we get into the Dow, let's talk about the dollar index. So what do we mean by dollar index and what's happening right now? Well, the dollar index has come down to support at 94.70. It has found that support. It previously found that support, very importantly, during the crisis period and then bounced off it. And when we're talking about risk on, risk off with the dollar, if people are taking profit on the NASDAQ, taking profit on the S&P 500, they move out of those positions into US dollars, which strengthens the US dollars, or at least that's the general kind of consensus. If we see risk on, then effectively what that means is that the market is very hot. People want to get into the stock markets. They get out of US dollars, and it creates a lack of demand, which is what we've seen over the last couple of weeks as the US dollars have become less demand. And of course, the stock market has been the place to be. Let's take a look together at the Dow. What are we seeing? Well, we've mentioned this a few times. We have a 200 simple moving average on the daily, which is this green line. And we have a 20 exponential moving average, which is this red line. And previous resistance, so again, this role reversal price action concept, which could become support. Now, the Dow is currently trading at 26,558, but it does make sense that it could come down and, of course, at least test this level even today, with 26,300 being a key level of support for the Dow. That would be a level where we'd probably see some buying pressure come into the Dow Jones. When we're looking at US-China trade tensions, though, it all comes down to the NASDAQ. The NASDAQ becomes the most important index to look at, as that's the one that will be most affected by this type of thing. We have the 20 exponential moving average on the daily. We've talked about this a lot on the channel, holding all of the bull run cycle here, and now coming under pressure again at an incredibly important level. The reason this is such an important level is we've seen a resistance up here. We've seen, of course, support already at this line, at this 10,500 psychological level, and it's almost trying to break through right now. What type of pattern is this? Well, it's what we call a double top pattern, where we've got two resistances that are equal. We've got an intervening trough, and then if it breaks through and closes below this intervening trough, it basically signals something to investors. Another thing I wanted to say is that with this double top, we've also got a trend line intersecting at the same point. So we have a lot of technical reasons to say this is an incredibly important point for the stock market. And it's why I'm going to be doing an extra special video on the weekend discussing what's happened and where this close ends up lying. So we've got the trend line, we've got the support, we've got the 20 exponential moving average, and then we also have the pattern of the double top. That usually signals that the move of the double top will happen in terms of, again, so that range will happen. That's the idea behind this pattern. Where's that signaling to? Just around 10,000. Now, that's interesting because what is that? A key psychological zone. 10,000 is a key psychological zone. What we always do in the stock market is we look at one of the most important closes, and one of the most important closes is the weekly. What happened last time at the weekly for the NASDAQ? Well, it rejected it. It kept getting above and then could not close above that 10,000, and then it did, and this signaled kind of further bullish strength. It rotated up to 11,000, the next key psychological level, and now it makes sense that this zone could be acting as a very good level of support. And look at these weeklies. Weekly rejection, very strong weekly rejection. This is a shooting star. Now, is shooting stars good enough? No, because we've seen shooting stars over here did not work out. And even though this is one of the most popular kind of retail candles around, the stock market knows this. I kind of feel like they're manipulating people a little bit with this type of candle, but when it's at the right position, it's very important. So we're seeing pretty big rejection here at this stage without a close on the NASDAQ. We know that a double top pattern is basically signaling the market should come down if it closes below and get that 10,000. And this has, I guess, me excited if you're looking for getting back into the market. There could be dip positions coming up where you might see 10,000 as being a good dip position for your favorite tech stocks. maybe even lower. I mean, the double top pattern signals usually the end of a trend and the start of a new trend. That's the idea behind it. So how do we trade a double top pattern? Well, one of the ways you can trade it, and this is just my opinion, and obviously do your own technical analysis and analysis in general before making any kind of decisions, is you would see usually a close below the zone, below that trough, that intervening trough. And then when it closes below that zone, the conservative entry is, you can always take the aggressive kind of close, but you can also wait for it to come back and do the role reversal again. So where it tests this previous support, which is the 10,500, and then it becomes effectively resistance and then starts selling off. And there's a whole bunch of checks that you can do in here. The other thing that's cool about it is you'll have a 20 exponential moving average, which acted as, of course, support, now acting as resistance because the market will have gotten through that zone. So there's a lot of things going on in the NASDAQ. We know that trade tensions hurt these tech stocks and potentially they are a little bit overvalued, as in we've seen them move up very steadily, very aggressively, and people could be rotating out into more defensive stocks. I thought it was worthwhile just to bring up FANG. This is the FANG index. We've already seen a bit of a move here where it looks like the market has already made a low on the FANG index. What have we got in terms of peaks and troughs? We've got a peak, followed by a trough, followed by a lower peak, and a break of that lower peak. We know it's held this 50 exponential moving average, but this zone here seems very interesting for us in terms of the FANG. Now, this is just the FANG CFD, but very interesting to see that it has done this thing. The trough has been broken through. It looks like it's going to confirm close. We haven't had it yet. And unless it rejects tonight, another bearish signal for just generally kind of the markets as a whole. On to the S&P 500. I know everybody loves this one. Where are we? We're right where we want to be in terms of resistance becoming support. The S&P 500 is testing the level near the end of the week. We have that 3230 really coming under pressure. That was resistance. It broke through early in the week, signaled a bit of bullish momentum. It's then come back down, tested this area, and this would be where you expect some bullish pressure. If we go down to the things like the 4-hour charts, what's happening there? Well, this is the futures. It's really just, it's kind of found support there the first time, broken lower, and now we'd expect it to probably consolidate in this area. If it gets below here and closes the weekly, I think that's actually pretty significant, as when we go over to the weekly and we look at the candle, this would be a very bearish signal if it went all the way back down. We'd basically be getting a massive shooting star and there would be no confirmation above this resistance zone on the weekly. So I think a lot really lies on what happens tonight on the close, as in what happens on the stock market. If it does continue to sell off and this continues to weaken, we could be seeing one of the first bearish signs. Will the Fed get involved? We don't know yet. Will there be some kind of vaccine coming out like there always has been? We don't know. Or will Congress randomly say they're going to approve something? Time will tell, but certainly the stock market is showing some bearish signs right now. And everything comes down to, of course, confirmations over long term. So I hope this video helped everybody. If it did, remember to subscribe and, of course, hit that like button. And comment down below if you got to the end of this video with what your favorite analysis that I do is. Is it the top-down weekly approach? Is it that you want to see a Q&A where I cover some of your questions? Let me know what you'd like to see on the channel, as I'd love to show everybody some of the things that we do more than just stock market analysis. Happy trading, everybody, and have a great weekend. Bye.